Hi, good morning. You're watching the market right here on ET Now with me, Aisha Faridi. I've got Shrishti Sharma, Snehi Shah as well in the studio. And it was the Apple event last night, the 2025 keynote, which was delivered and speak upgrades, but few surprises as well, as it unveiled a host of software features led by AI. But if you ask what was the standout, it's a major redesign called Liquid Glass in iOS 26 alongside macOS Tahoe and AI-powered live translation across FaceTime messages and phone calls as well. Apple is also now going to be integrating ChatGPT into its image playground and boosting Vision Pro with gaming and productivity tools as well. The fun features now include Apple TV's new karaoke mode and lyric translation in Apple Music. All updates are available for developer testing now, with full public releases coming this fall itself. In fact, let's get a slice of what Apple CEO Tim Cook had to say from the event.
Getting ready for the release of F1. This incredible Apple original film premieres in theaters on June 27th, and we can't wait for you to see it. F1 is one of the most thrilling, high-energy movies I've ever watched. It continues our commitment to deliver the very best in entertainment, made by the world's most creative storytellers. And we're incredibly proud that Apple TV Plus has once again been ranked #1 in quality programming for 4 straight years. This is truly amazing. As you know, WWDC is a special time of year and an important moment for us to celebrate our global developer community. We believe deeply in providing developers with the newest tools and technologies to help them do their very best work. And there's no better place to do that than WWDC.
All right, now let's talk markets then, and let's tell you what other cues we are getting from the global markets. Firstly, from the US market, it was quite a steady day in yesterday's trading session. Majorly, all the benchmark indices ended almost flat. Do remember that the markets are definitely waiting out for the outcome from the US-China trade meet that is underway in London. It's the day 2 of the meet, and from day 1, we have the comments coming in from Donald Trump as well, saying that he's getting the positive signals from the meet that is underway. But talking about the index move, S&P 500 did eke out its 2-day gaining streak. Now Dow Jones ended almost flat, Nasdaq closed marginally higher, led by Qualcomm, and other than that, it was some of the other counters like Tesla. Other than that, Disney was also in focus. Other than that, all eyes indeed on US CPI data later this week. So that is another big cue that the markets are waiting out for. And indeed, Trump has also come out with the comments coming in on Starlink, saying that he has no plans to terminate the Starlink usage. And yes, Apple event was also underway in yesterday's trading session. Other than that, from the commodities market, we are getting to see that it was the Brent crude as well as gold. They were nudging higher. There was a bit of a softness that we have seen in the dollar index, now trading and hovering around that $99 per mark. Other than that, it was the trade, it was the US 10-year yield. A bit of a softening in that number is what we have seen, and slipped below that 4.5% mark. So these are the global cues that we are getting to understand. Nothing major. Yes, of course, some of the big comments that the markets are waiting out for is the US-China trade deal that is underway. And yes, some of the macro data lined up later this week.
So that's on everything that's shaped up globally. But if you take a look at how our markets are panned out yesterday, not a day to complain. Yesterday on D Street, we saw some good moves. Nifty ended off the day's high, but still comfortably above the 25,100 mark. So looking good over there. Almost 0.5% up coming in on the Nifty as well as the Sensex. Nifty Bank did well. It was the day of the banking and the financial stocks yesterday, where the NBFCs and MFI players have gained stellarly in yesterday's trading session. Other than that, broader market resilience continued on D Street, with mid-cap closing with gains of over 1%, small cap once again outperforming the entire street, a 1.5% gain coming in on the small cap index. So Nifty mid cap continued at 4 sessions gains. Small cap continued to gain for the 6th straight session yesterday. PSU banks reached a 6-month high. Like I mentioned, it was the day of the banking and the financial pack yesterday, but where we saw some sheen coming back and returning was the IT and the metal index. Pharma also gained for the 4th straight session, but it was a slightly somber day for realty stocks since they snapped their 2-session gains, and realty was the only index that ended in the red. In terms of FII and DII, we've seen some buying coming in across both of those categories, where you have FII buying that's come to the tune of almost 2,000 crore rupees. DII's bought shares worth 3,500 crore rupees. So all in all, it was a good day for D Street, and all eyes are going to be on how our markets pan out today, Aisha.
Yeah, absolutely. Given the, thumping buy coming in from both the FIIs as well as the DIIs, and look at the kind of volumes that these buys, largely led by financials, were backed in with, rather. ICICI Bank, way surpassing its 10-day average volumes in just one single day alone yesterday. Similar was the case with the trades on a Federal Bank, with an Axis Bank, with an IndusInd, HDFC Bank, Kotak Bank. The texture of the market yesterday in terms of the winners really told you that it did smack of FII buying clearly. That said, the policy trickle-through really continues. Yesterday was no different. The fact that you did have financial stake charge clearly was a telltale sign on that. Although some brokerages do believe that maybe in the near term, stocks like Bajaj Finance do, they do recommend some profit taking on Bajaj Finance. But that said, the NBFC space, that's what's now leading the charge. Something that was just dominated by private banks. It's NBFCs, the smaller ones, which are now taking the charge. Look at Chola Finance. Look at what was happening on an L&T Finance, for instance. Even a PFC, for that matter, wherein there have been various brokerage upgrades which have come in now post the RBI policy, wherein the margin gain, while it likely may be lower than some of the NBFCs like a Chola perhaps, but assuming this pass-through is going to happen on fresh and floating loans, PFC as well as Chola Finance are being touted as some of the key winners. That said, the kind of churn in the market was also evident. Look at what was happening to underperforming sectors like IT, for instance. They are now beginning to participate in the rally. Although, to be fair, in bits and starts, that move already started off about 10 odd days back. But in the last 1 month and 3 months, vis-a-vis the Nifty, look at how the IT index has performed. And then last 1 month, it's actually managed to beat the Nifty performance by a good 5% of a gain. Remember, this was the most ignored and under-owned space, IT that is. I mean, if you still ask fundamental experts, they'd recommend steering clear of any of those globally linked sectors, and IT clearly comes at the top of their list. But the charts and the price patterns on IT is indicating something very different. In the last 5 months alone, you have seen a decent gain by the index itself, and I'm not even talking about individual names. But let me take it across to Ankur, find out what the global commentary has been overnight. Ankur?
Yes, important comments coming in from Jensen Huang, co-founder and CEO of NVIDIA. He mentions about UK that it is in Goldilocks circumstances. In fact, he praised the country's artificial intelligence and that it is an incredible place to invest, and at least he's going to invest there. Apart from that, he also pointed out one missing thing which is there according to him. He said, referring to lack of homegrown sovereign UK AI infrastructure, which is one thing which needs to be addressed. You can't do machine learning without a machine, and so the ability to build these AI supercomputers here in UK will naturally attract more startups. These are the comments which came in from a founder and CEO of NVIDIA. But Donald Trump, always in news, and he mentioned on Starlink, and remember, this happened after the bromance which ended with Elon Musk. He said, will not end government use Starlink satellite service. He also mentioned that Starlink is a good service and maintaining that he wishes Elon Musk well. and is open to talks. So the statements which is coming from both the sides, including Musk, has been quite comforting after that spat which brewed between the two parties. Remember, even Elon Musk deleted few of the tweets which he mentioned earlier. But shifting back, focus on the tech sector, which has actually maintained a deteriorating rating from neutral if you talk on tech sector, and this is for Asia Pacific technology sector. It is mentioned that change reflects the direct downside risk that tariffs will hurt demand for the hardware, and also mentioned that likely second order effects on weaker consumer spending, and that is going to weigh on economic growth globally as tariff wars are there to stay, and Apex tech sector has actually greater exposure to these issues, and hence this kind of revision has been made by Fitch on the tech sector in APAC region.
Ankur, we leave it at that. I think the biggest takeaway and the biggest cue that the market was looking out for, nothing really came by over there. US-China trade details were, that is from their meeting in London yesterday, were rather limited, though US officials felt optimistic about the talks so far, and the talks are going to continue today as well. US is willing to remove restriction of some tech exports in exchange for China easing limits on rare earth shipments. That's the official commentary that we've picked up from wires so far. The trade talks, of course, are going to continue today, so let's see what really comes about and whether there are any details which are divulged or not. But Rudra is here with us to talk about what the market setup back home is looking like. Rudra, hi, morning. Managed to consolidate it a little bit yesterday, around the 25,100 print. A lot of churn in the markets, led of course by financials, IT as well joining the party. What's it looking like for today?
Good morning, Aisha. Thanks for having me in the show. See, for me, definite signs of more short covering will come in coming days. And in fact, if you see the positioning of FII on the long short ratio, there has been still 80% on the short side and still more short covering is yet to come. So for me, markets on Nifty trading above 25,000 is a clear sign of market on the buy side, and every dip is a buying opportunity. Even at current market price, if you enter into right sectors and stocks, there is a lot of money to be made, especially for both traders and investors, and also a lot of opportunities still available in broader market for investors. And if you look at Bank Nifty level, we are decisively trading above 56,000, which was earlier acting as a strong resistance, and that will now act as support. So to conclude, Bank Nifty trading above 56,000 and Nifty trading above 25,000 is very, very bullish. Sector specific, yes, the move is still on, and you will see financials doing very, very good. Definitely the repo rate cut was way above expectation. It was not 25 basis point but 50 basis point. Along with it, the liquidity push, the CRR cuts, all this tells to me that yes, the positioning also technically and fundamentally has more legs to go for the current market. I will be looking at 25,400, 25,500 to come very soon. And yes, Bank Nifty is headed towards 60,000. Financials will still perform well from current level, and buy every dip whatever you get in this market. No shorting whatsoever.
So that's the take coming in on the index. No shorting whatsoever. That's the call from Rudra. But Kunal, the financials is the consensus buy, and we have seen great moves in the past 2 days. But within financials, you look at NBFCs, you look at banks, you look at gold finances. They are doing well. Which pocket is looking the most attractive to you?
I don't know anything else is left out because all of them are looking attractive at current
Even
levels.
now?
Yeah, even now, because the volumes are being changed, volumes are chasing the prices, and I think that's a comfortable sign because these stocks have come out of their 3 weeks or 4 weeks of major consolidation, and that I believe is a very healthy sign. So, for example, look at the gold financiers, look at Manappuram Finance. That stock was at 230, 235 for I think 3 or 4 weeks, where there was a literally like a flatline move for the stock over the last many weeks, and then nothing major in terms of the price trend change which had happened for the stock price. But then post that, we saw in the last 2 days the stock jumping up almost 30 points, 35 points towards 265 levels. So that's the kind of a move which has happened for many of these names. Yes, on the short term charts there could be a case that these stocks may come back into slight overbought territories on the indicators, but when you see stocks consolidating for 3-4 weeks, and you see such kind of a rapid price action which happens in a couple of days, that's generally a precursor that you're looking at a major multi-week, multi-month uptrend into these stocks. And even in an uptrend, there's bound to be a phase where these stocks come into a slight overbought territory, consolidate for a couple of days and then move up higher. I think we are in that kind of a zone. In the market move, of course, are two very important phenomena. One is the drop in the open interest over the last 4 or 5 days. So there's almost been like a 12 lakh or a 15 lakh OI drop in the Nifty futures over the last 4 or 5 trading sessions. So that should probably use confidence for short-term traders, expecting that the markets are going into a short covering mode. And the second and the most important part, we are not in the zones of 19s and 20s on the India VIX. We are almost at 14.5 on the India VIX. So that should also comfort a short-term trader that we are not looking at an extreme amount of volatility on the indices, even if the index at some point of time gets into an overbought territory.
So that's the take on the overall market on the technical terms. But Rudra, coming back to you, you're bullish on the entire market construct, especially on banks, wherein you're seeing Nifty Bank reaching 60,000 soon. But what about PSU banks? Already at a 6-month high, do you believe there's more run-up over here?
Definitely, yes. In fact, the move in PSU has just started a week before. Look at SBI, look at PNB, look at Canara Bank, and more than anything, even their last quarter results, Canara Bank came out with a fabulous result, and stock has just started moving for a week's time now. Still long way to go, still steam is left out. Yes, someone may not be catching the entire rally at the right bottom level, but yes, even at current market price, PSU banks will do in fact much better than private banks from current market price. Yes, earlier I was very bullish on private banks, especially HDFC and ICICI. Now it will be the turn of PSUs from current market price. For me, the best buy will be Canara Bank, followed by SBI and then PNB. So yes, Canara Bank, SBI and PNB still looks very good even at current market price. And second tier mid-cap kind of private banks still has long way to go. So if you want to pick up stocks, whether it is RBL Bank, Bandhan Bank, these stocks still have steam left. No doubt yesterday the move has already started in them. And yes, any dip or any correction in market, one can definitely look into PSU banks as well as this mid-sized private bank.
Your stock list like?
So I'll go to buy calls. IT we were discussing yesterday, mid-cap IT names. I think Oracle Finance, OFSS is something which starts to look attractive, especially with the kind of breakout. It's a classical chart pattern, a bullish flag formation on the daily charts, a breakout at the back of higher volumes, slight surge in terms of indicators on the daily time frame. So would look out for a near-term target of 9,500 for the stock, and stop loss could be kept closer to 89.50. AU Small Finance Bank is something which starts to look attractive, especially when the stock confirming breakouts of multiple layers of resistances, 700, 750, and now closer to that 775 mark. So would look out for 800 as the next target. Stop loss could be kept at 755.
All right, so those are the buy calls from Kunal. But Rudra, what about you? Any of the stocks within the financial space making up to your stock buys?
Yes, last week I was so bullish on PSUs and I was always repeating, yes, the theme will be PSU, PSU and PSU. But now, yes, for me, insurance, NBFC, these are all other areas of financials which can do very good. So for me, HDFC Life at current market price is a very good buy. Yes, stock has given a clear up move, consolidated, and now it is breaking out. At current market price, it's a very good buy. Risk reward is favoring on the long side. Stock available in futures, one can definitely go long in future. Looking at target price of 790 with a stop loss of 745. So for me, even infra as a push will do very good. Indigo was my call to buy at any price, but yes, I'm picking now an airport stock. GMR Airport looks very strong to me, and yes, this stock can head towards 100 rupee. For a very short term, you can have a target of 90 rupees, keep a stop loss of 84 and go long on GMR Airport.
HDFC Life and GMR Airports, two stocks that are looking attractive to Rudra right now. On that note, we'll slip into a very short break with the GIFT Nifty implying an open above 25,240 thereabouts, around 250. So seems like the up move will continue today as well. But let's slip into a short break and we'll be right back.
Back with the market right here on ET Now, and let's just revisit what the GIFT Nifty or the Nifty implied open is currently sitting at, and it seems like after yesterday's consolidation, we could be in for some more gains although in a narrow band. At least a softish start is what the GIFT Nifty is currently indicating, with a positive bias, and now we seem to be inching closer to that 25,200 plus print. But let's try and understand what's happening with the global construct right now. There are still so many overhangs, especially with regards to tariff, what's going to come about between US, China on the sidelines of their London meetings and negotiations. Who better than Swaminathan Iyer, consulting editor at ET Now, joining in right now to give us his insights on exactly that. Swami, good morning. Good to have you. Well, the official word so far is that US-China trade talks details were limited on Monday. I mean, they're saying that US is willing to remove restrictions on some tech exports in exchange for China easing limits on rare earth shipments. But nothing has really happened. Swami, is it going to be too hopeful or too optimistic to think that everything is going to be eased out on the sidelines of these London meetings?
The London meetings may not clinch it, but you have to see that there was a 90-day pause on April 2nd. That deadline is now not very far off. And no big deals have been clinched by Mr. Trump except with Britain. So I think right now they're getting a little uneasy and willing to give way. Because of that, in the USA, there is this new thing called TACO, standing for Trump always chickens out. So Mr. Trump the Dragon suddenly becoming Trump the chicken who chickens out. And again on a number of things, he is now going relatively easy because I think he wants to clinch something before those 90 days, all the important things. But others are saying that this is the case. And therefore, while earlier people were willing to say, Baba, this madman has to be appeased, just appease him. The Chinese stood up when Trump increased the import tariff by 125%, so did they. And ultimately, Trump had to back down on that and has backed down on various things. So on the one hand, this means that some kind of deals are definitely more possible. It also means that every country, including India, we have an incentive not to give way very easily. We have an incentive to say, China stood up and it was rewarded. If all of us stand up, then we have this guy who, from being a dragon, now is beginning to chicken out on various deals. So let us talk tough, let us act tough. So that is the global position right now. For the very fact that the Americans say they are willing to ease the restrictions on high-end chips in return for the rare earths is a sign of chickening out in a big way. Let us see if that actually happens. But as I said, we all have an incentive now to act tough because Mr. Trump is very keen on reaching deals with the major countries before the 90-day deadline. Let us see what happens. As I said, I would look for last-minute developments rather than anything right now, despite the talks in London.
Okay, Swami sir, morning. This is Nehi also joining in. Given that with everything happening between US and China and within the US economy itself, you also have the matter of the rare earth metals that's looming on everybody's head, and not only these two countries. Give us a sense of where India stands amid this storm. Do we stand to benefit from supply chains potentially shifting out of China and towards other EMs? And also we understand that we do have enablers to manufacture our rare earths, but we're at a very nascent stage. So what's your take on that as well?
Well, for any country, all across the world, major countries have suddenly realized, by God, I'm so dependent on China. It hadn't occurred to them in the days when globalization was proceeding apace, that you suddenly become so dependent on one single source. The United States has a bill of $439 million to promote its own supply chain of rare earths. We have begun, but it will take a long time. And frankly, we do not have very good domestic prospects It will be more like trying to diversify our sources from other places. But the fact is that right now, our auto industries and smartphone industries are both complaining that the supply chain is becoming very strained. Stocks of rare earths and permanent magnets are coming down to dangerous levels. And if this does not reach some kind of quick conclusion, they may have to reduce production from June onwards. They are all hoping that, this 90-day deadline of Trump, if it results in a certain Chinese easing with the USA, maybe it will result in USA easing with India and other countries as well. I do not know. India has made it very clear that Sino-Indian relations must not be mixed up with Sino-US relations. So, that's one good thing. On the other hand, it also means while we can bargain, while we don't have to worry as much about China hitting us as the US has, it also means we have less leverage to use the USA to get things done for us. So let's see. I think China is keeping a very large number of countries on a tight leash to prove how strong a position it is in. And it knows very well that while all the other countries want to get other sources of supply, it's going to take some time. And therefore, China is going to have the upper hand in this deal, not just in what happens in the next month or so, but even in the next year, in the next 2 years. So this is going to be an interesting Chinese lever that it may use again and again. As of now, let's see, that 90-day deadline is approaching, and let us see whether the USA and China manage to do a deal. Once that happens, I think there will be a lot of relief the world over, and people saying, okay, things are not as bad as they are. The guy has chickened out once again. Let's see.
But Swami, sir, things are really turning out to be bad between Elon Musk and Donald Trump, at least what their social media handles do suggest. And finally, that bromance seems to be coming to an end. But help us understand that what do you make out of that? Because some experts are even highlighting and anticipating that it is possible that both the parties come along and once again join and shake hands. But what's your sense on that? Because for now, in the latest commentary, we see that Donald Trump calls Starlink a good service, but the tensions between both of them do remain. How do you see the landscape shaping up?
At this point, I think Trump is very keen on doing deals within that 90 days thing. That's why, people are accusing him of chickening out. From starting with a very, very tough stance, he has given way again and again. So I would hope that a number of deals will be concluded within that 90-day deadline, but by no means all. I would also add that there is an incentive for every country like India to drag its feet. The key question is what will happen after the 90 days? Will Trump once again impose what he called those reciprocal tariffs of different rates from 26% to much, much higher rates all over the world? Is he going to reimpose them? As of now, that does not seem to be his intention. He keeps saying, I'm hoping for deals. If those deals don't happen, are we going to see another phase of Trump saying, now I am going to act tough? Because if you suddenly get reciprocal tariffs coming back after 90 days, then, all this optimism that you're seeing in the markets right now, it will disappear like a whiff of smoke. And all kinds of dire predictions will come again. Right. So we don't know what is going to happen. However, the longer term prediction, I would say, please let nobody think that the 90 days is going to be the end. I think Mr. Trump is going to continue to use the tariff lever for 4 full years. It is not over in 90 days. So whatever relief you may take after 19 days, don't think this is the end of the tariff thing. He is a believer in tariffs. He really thinks that tariffs are the solution and not a problem. And while in the short term he may say Okay, I'll chicken out here, I'll chicken out there. The chicken will come back again and again and again. I do not think you are going to have any kind of safety or security in the next 4 years. So in the long run, watch out.
Right. But Swami sir, what about the big, beautiful breakup now between Musk and Trump? What are the implications of that?
Well, I have to say that, Mr. Musk has been revealed as a greedy, money-grabbing guy. I mean, the thing he mainly disagrees with is, among other things, is that his own pocket is going to be burned by some of the clauses in this bill. Some of the huge amount of subsidies that he has been getting, that some of the tax breaks that buyers of electric vehicles have been getting, if all that is taken away, it will hurt him very substantially. And people really think this is the big thing that's going behind. In any case, I do not think Mr. Trump is famous for having permanent allies. I mean, even in the case of Iran, he turned around and said, we can do a deal with them. And when people was astonished, he says, we have no permanent enemies. In the case of Musk, he can also say, we have no permanent friends. As long as Mr. Musk was willing to spend millions of dollars on helping Trump to get elected, or as long as he was willing to ride on some of the slashing of expenditure, that part of the bandwagon, Trump was with him. The moment he got out of line, the moment that he ceased to be as important as he thought he was, I think he went into a sulk. And Mr. Musk is welcome to go into a sulk, but Mr. Trump is the guy who has the trump cards. So this was going to happen at some point of time. And I would say that nobody should ever believe that Trump has permanent friends. If you look at his first term itself, many of the people he appointed to top posts were sacked. And he has sacked people all over the place. In the TV program called The Apprentice, yes, the favorite line was,
You're fired.
Yeah. Okay, so Mr. Musk should not be surprised.
That's politics, and two big egos never make for a great relationship. But Swami, what about India? We've got a great mix going on here. You've got lower inflation, now lower EMIs after the big bazooka from RBI, lower taxes, back in the budget, and now good monsoons as well. You think it's a good mix for India markets to, stay up?
People are talking about the big bazooka and the big cut. To me, this is a preparation for a possible recession. So they are doing a counter-cyclical thing now itself. Just a month ago, I would say there were people rating chances of a recession extremely high. Now those chances may be a little less, but just wait for the end of the 90-day pause. Let us see what happens about this reciprocal traffic. Let us see how many trade deals are done. Because if it doesn't get done fairly quickly, we will indeed step into a recession. From that point of view, Mr. Malhotra can say, well, look, I am taking advance action. I can see the possibility of a recession. So this is counter-cyclical policy being taken at a very appropriate time. That, I think, will be his defense. There are some people accusing him of being too gung-ho. The Financial Times in London has said, hey, just take it easy. Why are you cutting so badly? After all, you still have these problems and things are there. I agree. We have our problems, but one of those problems is going to be a possible coming recession. And as a counter-cyclical thing against that recession, I think the RBI governor's aggression can be justified at this particular point. It's a bold move, but boldness might pay.
How things play out. But Swami sir, great to get in your insights as always. Thank you for your time.
Thank you.
Well, for now, though, equity markets seem to be cheering that front-loading by the RBI. We've been holding out well, and right now, too, the Nifty implied open is straight away moved up to that 25,250 print. So let's see how we actually hold up. and move on from here. But Varun is here to highlight all the stocks in news this morning. Varun?
So let me start with Protein eGov because the company has received around 100 crores order from Bima Sugam India Federation through the RFP process. So this is a big order for the company. Keep an eye on Protein eGov. Jana Small Finance Bank, the company has applied to RBI for seeking approval for voluntary transition from a small finance bank to universal bank. Z Entertainment, the company has entered into a strategic partnership with content startup Bullet to launch India's first micro drama app. Quest Corp, two companies, Digitite Solutions and Blue Spring Enterprises. These companies were actually spun off from Quest Corp, and both the companies have received approval from NSE and BSE for listing of the equity shares. And on Wednesday, that is 11th of June, the equity shares of both this company would be listed and admitted to the exchanges. So keep an eye on Quest Corp as well. Keep an eye on M&M and M&M Financials because Mahindra has raised their stake in M&M Financial to 52.49%, and this is because of the right issue that the company has subscribed to. Rights Limited, the company has received LOA from Ministry of Public Works, the Cooperative Republic of Guyana, and the overall order is worth $2.98 million. And also keep an eye on Eternal, that is Zomato, because Rapido has entered food delivery, so the competition would intensify over here. So keep an eye on Zomato as well.
All right, thank you so much, Varun, for getting us all those details. So let's watch out for some of the stocks that Varun just highlighted. But along with that, let's also look at the stock that has been down since 2 trading sessions, and that is SEPC. The stock has cracked as traders sold large quantities. But what else are the possible reasons for the fall? Let's go across to Sharath, who is here to tell us more on this. Sharath.
In focus is SEPC, and the company's rights issue has opened, and interestingly there has been a massive sell coming in from the traders and large quantities are reported of sales in the last trading session. The stock fell more than 6%. Now the no response has come from the mail query sent by ET Now on the weak response for their rights issue, and over the last 2 sessions almost 8% of the overall stock value has been eroded. Now there are certain key concerns also which investors should know before applying for this rights issue, and his prudence. That 3 important factors we put it out. The first one is the profitability and the working capital of the company. There are issues historically speaking. There is no clarity coming in for the rights issues proceeds. Where will they be used? And interestingly, there will be a potential dilution of earnings. Also, if you look at the stock from 2024 high levels, the stock is down 55%, and in this year itself 2025, 32% of the investor wealth has been eroded.
Okay, Sharath, thanks for all of those details. So, amid all the other newsmakers, SEPC is also going to be a stock to watch out for today. But we're now being joined by Devin Choksi, Managing Director at DR Choksi FinServ on the show. And Devin, hi, morning. Thanks so much for joining us. What are you making of the sector churn that we're seeing in the market? Earlier in the show, we were talking about how we're seeing a comeback from IT, metals. On the flip side, realty seems to be entering a cycle of sluggishness now. Would you agree with that? And what are you making of this entire sectoral churn that we're seeing?
Hi, good morning. Well, I do not know whether it is sluggishness, but I do agree with one thing that the markets are basically moving with the rotational preferences. Suppose if the RBI had brought down the rate of interest to infuse the liquidity to CRR cut, most of the banking stocks have started finding themselves in the favor, also from the perspective of momentum. And as a result of which, I think some of the other ones who are not catching up with this momentum, I think they are getting less preference, which is justified. This market remains by and large a market where I think higher amount of momentum-based trading activity is happening. Also because of the fact that I think valuations are otherwise reasonably priced. They are more or less, I think, discounting FY27 earnings from the perspective of, I think, whatever the earning growth we are experiencing currently. I guess, I think, till 27, most of the stocks are fully priced in. And as a result of which, I think the markets, because of the liquidity as well, is basically showing higher amount of, I think, the churn, higher amount of rotation in the portfolios of the investors. Maybe I think that it's a way to operate this market. And in any such kind of situation, when individual stocks, they become corrective or they provide, I think, the opportunity in the price corrections, I think that becomes a buy opportunity in my viewpoint. And that could include some of the select ones be it in the area of metal and commodities or be it in the area of auto and ancillaries as well, where we remain distinctly confident about the growth prospects going forward.
All right, so that's the take on the markets. Select pockets are looking good as of now. But Devin, also help us. What do you really make out of the oil and gas space? The reason I ask this because select counters have been doing well, and especially MGL after the analyst meet and the key takeaways. It's a 7% jump in yesterday's trading session. What's your sense on the space overall, and any specific take on MGL?
So we are not so bullish about these companies, particularly because I think they're driven significantly by some of the variables which are not in control of companies. For example, I think the gas price. For example, the government policy controlling the gas price. I think we ourselves do not find very comfortable with this particular space at all because of the smallest factor could possibly affect the business of these companies. Having said that, I think from the utility perspective, these companies have created a significantly large amount of distribution points with the end consumer, be it on a B2B side of the activity where they would supply to the bulk consumers like gas stations, and otherwise I think this is being supplied to the pipe gas to the consumers in general. So in my viewpoint, I think both B2B, B2C models definitely existing, distribution points well connected. The fact remains that I think dependent significantly on the government policies, and that's where we are not very confident about putting a confirmed recommendation or confirmed recommendation.
Right. Devin, there was a lot of panic in the market yesterday with regards to what happens to an Eternal, what happens to a Swiggy, now that Rapido is venturing into food delivery. But we've seen in the past that the battle's won by the cash rich. So how do you think this entire situation is going to plan out, and, what it would mean for the likes of an Eternal and Swiggy?
I think you touched upon a very important point. I think the cash reach, I think in your conversation, I believe that I think while we are talking about Eternal, we are talking about Rapido, we are probably, I think, undermining the big elephant sitting in the room, which is JioMart. They have already started the deliveries without charging the platform fees, whereas the likes of Blinkit, likes of Swiggy's and the Zomatos, they do charge the fees, I think, on multiple instances. Be it from the customer, they charge the platform access fees, or be it from the hoteliers, I think, for whose food they are supplying, or even for that matter, other areas in which I think they are operating. I believe that I think this is going to get significantly challenged with the players like JioMart, who are having a significantly large amount of cash reach abilities to counter this kind of players in the marketplace. At the same time, I think most of these companies from investment perspective, when you look at them, I think they are actually putting at a fancy valuations. Given the fact that I think they have been succeeding with the price hike and the charges, I think these fancy valuations might get affected if the competition like JioMart would start penetrating faster and could possibly create disruption with that. So let's see how it goes, but not very comfortable because of the valuation also at the same time.
Okay, so that's the take on the entire quick commerce space. But Kunal, today we have a report that's come on Grasim from Morgan Stanley, wherein they've upgraded their rating to overweight from an equal weight earlier, and also upgraded the target price to 3,500 compared to 2,970 thereabouts. It's their top pick in the coverage. Would this also be your top pick in the space that Grasim operates in?
Not exactly a top pick, but I think, this could be a revival pick as such, because, the stock had, over the last 1 month, mid of May, the stock was at 2,800. I think if I'm not wrong, it was very close to maybe just about a 1.5% away from its lifetime high levels at that point. And from there came a very sharp and a swift correction for Grasim. And I think for consecutively 12 or 14 trading sessions, the stock fell down towards 2,400, 500 mark. So I think this could actually come as a reprieve for Grasim, and after this 400 point odd correction the stock had suddenly seen after being perched at a lifetime high levels close to that. I think we could be looking at the stock getting back into a revival phase. The long-term charts for Grasim are of course extremely positive. What it required was just about a booster or some sort of a catalyst in terms of news flow. I think this could probably act as a mild catalyst for the stock in the near term. And now we could be looking at the third retest of a potential new high test for Grasim, which is close to that 2,800 mark. So expecting the stock to gradually move up higher towards 2,800 levels over the next 1 to 3 months.
Okay, that's that on Grasim. But like we were highlighting earlier, Jana SFB, look out for that stock. They've applied for an RBI, to the RBI for a universal banking license and not the small finance bank that it currently is. There's Jindal Saw as well, wherein the company has approved a formation of their UAE step-down subsidiary and some JV agreements as well with companies in Saudi Arabia. So that's going to be the other stock in focus. And then, of course, there's Quest Corp, wherein two of their subsidiaries have got the exchange nods for listing. So those are stocks in focus. And, of course, Tata Motors as well after its analyst meet, which we will just talk about in a short while. But life insurance, they've also been seeing very decent growth in the month of May. We've got SBI Life, HDFC Life. They've been leading the charts with a 25 to 35% premium growth year on year. However, LIC continued to lag. All private players except ICICI Pru. Varun is here with the takeaways from those data points.
Well, for the month of May, it has been a decent set of numbers for life insurance companies, wherein the total premium growth for the month of May has been around 13%. For HDFC Life, it has been 33%. SBI Life, it has been 25%. And if you look at the APE growth for overall private insurance companies, it has been 7.2% on a YY basis. Now, this is because of high base. If you look in May 2024, the overall growth was around 25.4%. So because of this high growth, the overall APE growth for this month has been a little bit low. And also for LIC, if you look, the APE growth has been reduced by around 6.6% on a YOY basis. Max Financial, it has continued its strong performance with a 25% retail APE growth in the month of May. Also, if you look into financial year 2026, till date, individual AP market share of private insurance companies now stands at around 68.3%, and there is an increase of around 228 basis points on a YOY basis. The market share gain has been highest for HDFC Life, which has shown an increase of around 92 basis points on a YOY basis, and Axis Max Life, wherein they have shown an increase of around 123 basis points on a YOY basis. Also, brokerage houses have come out with report. Now, Nuvama says that investors will keenly watch out for business growth in first half of FY25, given the high base and upcoming regulatory changes. The top pick in the sector is HDFC Life with a price target of 850 and Max Financial with a price target of 1,540 rupees. Antique has come out with a note which says that because of high base in the first half of 26, the overall growth would be slow, but in the second half, the overall growth is expected to pick up. Although they have reduced their overall discounting assumption and also DCF by around 6 to 15%. The best picks are HDFC Life and Max Life. They have increased their target on HDFC Life, SBI Life, ICICI Pru, Max Life, and also LIC.
All right, thank you so much, Varun, for highlighting all those details. So this time it says SBI Life as well as HDFC Life that are leading the growth numbers. But what's been your reading like when it comes to the life insurance companies? Because month on month, yes, we are seeing an improvement. How do you see the sector moving ahead, and which are your top favorites?
Well, I think from looking at the private sector companies, I think they have been thriving on the product innovations. They have been thriving on the high value-added product at the same time, and also adopting the digital approach in expanding the market reach. So the acquisition of a customer, the cost of acquiring a customer remains comparatively lower in their case. So I think given that situation, I would think that they deserve to be premium ranked, which they are currently. The embedded value to EBITDA, the main ratio that we look at in life insurance case, I think remains pretty comfortably high for some of the private insurers compared to the LIC. In my viewpoint, I think the growth momentum is expected to continue for a couple of reasons. One, the income tax new income tax exemptions have started coming in this financial year, wherein the tax rates are not likely to apply till the amount of income which is about 12 lakhs. And that's where probably higher amount of surplus remaining in the hands of individuals, which would possibly find its way into some of the financial products, including the life insurance. In this kind of a scenario, the private sector companies remain relatively more favorable from the growth perspective, also because of the fact that their base is actually giving them an advantage at this point of time. Whether I think we would immediately buy into some, answer is yes and no both. Valuation wise, some of them have already started scaling up, though we find good potential in likes of SBI and HDFC Life, and also of course the Bajaj life insurance business. So we like those businesses from investment perspective.
SBI Life as well as HDFC Life. These are the stocks to watch out for, and yes, of course, the momentum that we are seeing in these counters are backed by a strong data. But other than that, today all eyes will be on Tata Motors as well, because just yesterday we highlighted some of the key takeaways from their analyst meet, and on that brokerages have come out with their take, yes, highlighting the fact that the company is now aiming to improve their margin performance across the divisions, gaining more market share when it comes to the PV and the CV segment. And onto the EV side specifically, they are highlighting that they are anticipating that the EBITDA margin profile for the EV segment will remain positive, but the free cash flow can be in the negative zone for the upcoming 3 years. Actually, Nuvama has come out with a note on Tata Motors where they saying that for JLR, they expect the sales to moderate ahead. It's a muted demand outlook, and increasing marketing and sales spend would lead to a muted 3% EBITDA CAGR over FY25 and 27. So not very gung-ho about Tata Motors, while they maintain their reduced rating on the stock with a target price of 670 rupees. So that's Nuvama take on Tata Motors, and I don't believe post the analyst meet any of the brokerages have gone ahead and raised their target price. But Kunal, what's your take on Tata Motors? The stock has been a bit of a range bound in the past couple of months, but do you believe that on technical front we can expect an up move, or do you believe that the range bound move can persist?
I think the range bound move should persist for Tata Motors for at least another maybe a week or so for the stock price, because there is no major change or shift in terms of volumes, indicator action for Tata Motors. Neither the news flows start to become extremely positive, and then you look at the other peers, maybe not exact peers from the auto pack, the likes of Bajaj Auto, Hero MotoCorp. I think these stocks, which are also fallen by more than 40 to 50% in that last leg of correction, even these stocks are taking their own sweet time to try and just about go through a time-wise consolidation. And even if there is a breakout of sorts, I would actually believe that that breakout could be a bit more muted in terms of the intensity, the way in which the stock has rallied in the last 1 month and then gone through a major time-wise consolidation. So bullish on Tata Motors. It's not as if that the view is on the bearish side, but then I think in terms of momentum, maybe not the best time to try and pick and choose that the stock would kickstart a momentum.
Okay, so that's the take on Tata Motors and the overall auto segment. But while we are talking about the Tata Group of company, let's talk about their consumption company as well, and that's Tata Consumer Products, because we have the annual report that was released yesterday, and we have Motilal Oswal's view on the same as well, wherein they've reiterated their buy rating with a target price of 1,360 rupees per share. They expect a revenue, EBITDA, PAT CAGR of 8%, 13% and 20% respectively over the course of FY25 to FY27. So here are some of the key highlights from the annual report, wherein the company has said that there has been balanced growth in their core portfolio. So that is something that looks very positive for the company. They're also saying that they've maintained leadership in the tea and the salt segment, and they're expanding into the health and wellness categories as well. Moving away from that, they also say that their growth businesses, which is Sampann and Soulful, now makes up 28% of the sales. Sampann has posted a 5th straight year of double-digit growth, and Soulful revenue is up 5 times since its acquisition in February of 2021. So obviously both of these acquisitions have been a very positive for the company, like Capital Foods and Organic India, which have also been margin accretive. Tea business, however, has remained muted, but salt business has remained quite strong. Newer categories have gained traction and improved profitability as well. Like we were talking about Organic India, Capital Foods, they've boosted growth, margins and added to new channels as well. In terms of the trade mix, modern trade has grown 18%, e-commerce is up 57% in FY25. The cash flow from operations in FY25 has come in at 2,060 crores, which is an uptick of 6.2% year on year. The annual report also lays a lot of emphasis on how the company has been innovating, and that has been one of the key growth drivers, because there's been a 5x jump in innovation-led revenues since FY21, over 150 product launches in 4 years. In FY25, the company has launched 3 to 4 new products each month. So that is something that's very strong for the company. It continues to hold a 20% market share in the tea segment. There's been a 15% revenue CAGR in the salt business as well. Ready to drinks portfolio has grown 2% in FY25. And international biz has also grown 16% to 460 crores in FY25. All in all, it's been a good FY25 for Tata Consumer Products, but this has largely been led on the back of new innovation. Kunal, what are you making of Tata Consumer on the charts, given that the entire FMCG pack has been sluggish for the last few quarters? We are hearing commentary on recovery in terms of demand, but it's still as muted as ever. What are you making of TCPL, and would that be your preferred pick when it comes to the FMCG space?
Yeah, it should be a preferred pick from the entire FMCG pack, because at a point where the Nifty FMCG index is still reeling below, for example, its long-term averages, Tata Consumers, on the other hand, I think is just about some 10%, 11% away from its lifetime high levels. And the recovery the stock had shown in the last 3 months from 900 levels towards 1150, 1180 mark, that was a very formidable recovery for Tata Consumers. So it's as if the stock has been a class outperformer with most of the other FMCG stocks. Yes, there have been few exceptions where some of the stocks like Marico, etc., they've already managed to make a new high for themselves and have been going strong on the charts. But I think Tata Consumers is also amongst the top 2, top 3 names, at least in terms of price performance. So would be bullish on Tata Consumers at current levels. And whenever this phase of consolidation, price correction gets over, we should be looking at the stock breaking past about that 1180 barrier.
All right, so that's about Tata Consumers. Let's watch out for that. But Rudra, help us with your take on RITES as well, because all these railway-related counters, there's been no stopping. And specifically for RITES, today we have a news flow that the company has received an LOA from the Ministry of Public Works rather, and the Cooperative Republic of Guyana. Give us some sense that technically, how do you see the stock placed right now?
See, from the lows of 210 just in the month of May, stock has moved to 300 now. That is a 50% rise just in a month span. So for me, yes, RITES has to now go and cross that level of 310, which is the resistance which it had December 2024. So once it closes above 310, a fresh momentum will definitely come in the stock. Looks very, very strong and bullish. Only thing is, I don't want to enter at current market price where you have the 310 resistance, which is very close to the current market price. So either buy it on a dip to levels closer to the 275 mark where you have a strong support, or wait for this stock to break 310 on a closing basis, and buying above 310 will give you momentum in the stock. So at current market price, I will avoid. I will have a buy on dip strategy to 275 or buy after a breakout above 310.
Rudra strategy on RITES. But Deven, coming to you, talk to us about the entire pharma space. This is a sector that has not been spoken about, given that we've seen some return of some moves coming in IT. Metals are doing well. It's of course banking and financial that's stealing the limelight. But what about pharma amid all of this? It's been steadily gaining with the market momentum, but I believe the market is, not factoring in the big overhang that's still on pharma, that is tariffs. So what are you making of this space?
That remains uncertainty for sure. I think till the time we get the full clarity on it. But leave that aside for a while. I think how Indian companies are strategizing their presence across the globe. On one side, I think they are bringing out the specialty generics, the complex generics that you want to call it as. Some of the large companies like Sun Pharma, Cipla, Dr. Reddy, among others, are the ones I think who are registering their presence with these complex generic drugs, which is giving them the advantage of the pricing power. The lever is very, very strong as far as I think the pricing is concerned on this particular drugs, because they are not competing with the pure generics. So that is a positive going for them, and most of these companies are expanding their portfolio on that side. Second positive which is going in is the API business, I think, which is again very comfortably getting merged into the formulation business, some of the global peers, the large pharma companies. And again, Indian companies, including the likes of Divi's, Laurus, and even the other majors who are basically having no relatively small component of the sales, are having presence in the API segment as well. So that also remains comfortable. And last but not the least, I think on the margin front, because of the input cost scenario remaining on an improvement side, most of these pharma companies are basically seeing a better margin in the current financial year vis-a-vis the previous years. So we remain distinctly confident about the prospects going forward, save and except this particular turbulence of tariff, etc. Once that gets out of the way, probably some of these companies could get re-rated from the current levels.
All right, so that's the view coming in on select pharma stocks. But Devin, with this, we let you go on that note. Thank you so much for taking the time out and speaking with us this morning. But with this, let's move on and let's also get you some of the tradable ideas from our experts, and especially when it comes to the mid-cap space. And Rudra, you go first. Tell us within the mid-cap basket, which is the stock that is making up to your radar?
See, for me, REC Limited looks a very, very strong buy and a great risk reward to enter at current market price. The move has just started 2 days before and you have seen volume action supporting the price. So for me, REC is a great buy at current market price. I am looking at initial target of 445 and then 490 to come on REC. Have a stop loss of 415 and go long on REC for a target of 490 to come.
Looking good from the mid-cap space to Rudra. Kunal, what about you? Where are you placing your mid-cap bets today?
So I'll go with the brand Excite Industries, and after quite some time, the stock coming back into a potential breakout above its 200-day moving average, and I think closer to that 400 plus mark is also a strong psychological breakout for Excite Industries. So looks like an interesting chart over the near term. Would look out for targets in the range of 418, and stop loss could be kept at 393.
All right, so those are the buy calls coming in from both of our experts. Let's watch out for that.